The Big Short by Michael Lewis is a gripping narrative about the 2008 financial crisis and the few investors who foresaw it. The book exposes how complex financial products, reckless lending, and systemic corruption led to one of the worst economic collapses in history. The story follows a small group of unconventional thinkers who recognized the growing instability in the U.S. housing market. These outsiders, Dr. Michael Burry, Steve Eisman, Greg Lippmann, and the young team of Charlie Ledley and Jamie May, discovered that the booming housing market was built on toxic mortgage loans. Banks were giving risky subprime loans to people who couldn't afford them, then packaging them into mortgage-backed securities and selling them as safe investments. Dr. Michael Burry, a socially awkward hedge fund manager, was among the first to analyze the data and realize that the entire housing market was a bubble waiting to burst. He predicted that millions of homeowners would default on their loans once interest rates rose. Burry used a financial instrument called the Credit Default Swap, CDS, to bet against the housing market, effectively shorting it. At first, everyone thought he was crazy, but he was right. Steve Eisman, a blunt and outspoken investor, came to the same conclusion through his own research. He saw how mortgage brokers were incentivized to issue as many loans as possible, regardless of quality. He described the financial system as rotten to its core, where greed had replaced common sense. Meanwhile, Greg Lippmann, a trader at Deutsche Bank, realized the market's fragility and helped investors bet against it, even as his own firm continued to sell these toxic assets. Lewis also introduces Ledley and Mai, two young investors from California who ran a tiny hedge fund out of their garage. They, too, saw the opportunity to profit from the collapse by betting against the supposedly indestructible housing market. Their story highlights how ordinary people, armed with critical thinking and skepticism, could see what billion-dollar institutions ignored. The book reveals the moral and ethical failures of Wall Street. Banks, credit rating agencies, and regulators all played a role in fueling the disaster. Rating agencies like Moody's and S&P gave high grades to worthless securities, while the government failed to monitor growing risks. Everyone was chasing short-term profits, assuming the system would keep going forever. When it collapsed, millions lost their homes, jobs, and savings, while the very institutions responsible were bailed out. The Big Short also highlights the theme of ignorance and denial.